Good afternoon to those of you here in Asia. Good morning to those of you in Europe, or maybe good evening to those of you in the Americas. Well, we are on the India market review. Welcome back to our regular followers. And if you're new, hopefully you're going to find this interesting. Um, Over this weekend, hopefully we'll do some more reviews on the global markets and maybe commodities and other asset classes. But for today, for now, it's the India market review after the close of the week for Friday, 13th March 2026 in India. And I'm recording this on Saturday, 14th of March. Uh, Judicious disclaimer, this is not financial advice. Please do your own due diligence before making any investment decisions. This webinar and my views here are only for information and educational purposes only. Right? All right. So having said that, let's jump into the markets. All right. So what I'm going to do today is basically continue from where we left off on the Monday webinar that I did. I think that was on 9th after the big falls in the Indian market after all the bombing in the US, in Israel, in Iran by US and Israel. What you're looking here is a weekly chart of the Nifty, and we'll keep switching between weekly and daily to give us a sense of what the market is up to. Um, Basically going to cover all the major important sectoral indices so that we get a sense of where the action is, what happened in different sectors, and if there are opportunities, if any. Those of you who are on my broadcast list, if you would like to get updates, which I do send midweek, or if there's anything that I feel is important to send out, you can connect with me on the phone number given on the screen and add my contact to your contacts list. Therefore, you will receive the the broadcast messages that I would send out through the WhatsApp, right? All right. So that's for, just updates as and when, any key updates that happen. Now, coming back to the charts. So the Nifty on Friday closed another 2% down, 488 points, and came to 23,000 during the day, intraday 23,123. Not far at all from the levels that we had mentioned on the 9th March webinar, saying that look for the lower levels for some support. Now, even before going ahead, let's show you something be interesting for those of you who know anything about Elliot Wave, right? Here's something to take home, starting right up front on the bat, that is this something that could be happening, right? Okay, so I know there's a lot of clutter. I will explain in a bit. Okay, so yeah, all right. So as you can see, what I've done is drawn a Elliott wave uh, retracement, all right? And what I've done is taken the not a retracement, a target extension with using the tool. Now, this is the peak. This is 0.0. You can say 0, 1. And this is a very sharp 2, right? If this is wave 1, this is wave 2, right? And a wave 3 is going on. Now, what we have seen here, the market action in this part is very, very typical of wave 3, right? Very fast, very rapid, very volatile, and tends to be quite aggressive. And if you're doing shorter term trading, very hard to navigate. But if you have a longer term perspective, then yes. So we have 0.0 here, 1, 2, and 3 going on. Now, if I were to put labels on that, it would be this. Okay. So there, 1, 2, this is 2. right? 3 is ongoing, right? It's not yet, may not be over, right? And there would be a 4 and then a 5 later on, which is yet to be determined. So 1, 2, 3. Now, typically the wave 3 is generally at least 1.618 of wave 1, and we have already achieved that. If you look at the screen here, the 1.618 level was at 23,490. We were there on Thursday, right, at towards the lows. And then on Friday, we have come close to the 22,000, the 2x of wave 1, which is at 22,865, but we haven't come there. We are at the low here of 23,100, say. So we're talking about another 100, about 150, 200 points lower for 2x of wave 1 to happen, but this could also be a wave 3 end. We don't know. Of course, a lot of things can happen on the weekend. And very recently, there has been the news that US has bombed their Iran's most important um, oil infrastructure, which is basically that the Kharg island where Iran's most of Iran's oil moves out from, right? So right now, only the military infrastructure is apparently hit, but not the oil infrastructure. If this happens, maybe today, maybe tomorrow, or it does not happen, that will definitely have an impact on the markets. 90% of Iran's oil goes out through this particular location, right? And if US does go ahead with that, so far they haven't, then Iran has already said that they will retaliate with uh, their own attack on US oil infrastructure, right? So let's see how this happens, and what happens, and if there is a pullback or there is a cooling off over the weekend, then we'll have some sense of what may happen on Monday. This is obviously an evolving story, and there is no way to predict. We are the last guys in the chain of awareness about what is happening, what is not happening, right? Okay. So, purely from an Elliott wave or technical perspective, we are at these levels, and it could well be that the market does settle down here, or we may go to a lower level. Now, just to get that clarity on the Nifty, let's okay, let's take out the clutter, right? Okay. Now you can see that this is where we are, and strictly speaking, not a very good support level. There was some support here, right? There was support here, right? Obviously, that got broken, and then there was some support there. That's also been effectively broken. And what we have is this move right now, which is, yes, there is a support zone here, and then at a low level here at about 22,190. Then there's definitely some strong support. So about another 1,000 points lower, which is around another 5%, right? Lower on the market, 5, 6, 7. This 5, 6, 7% can just happen in a day or in 2, 3 days, and then you can also have a quick recovery after that. So just notice this candle. This was a huge candle, right? Which went from 23,300 all the way down to 21,300, right? Almost a 2,000.2%, 10% drop and a 10% recovery, all that which happened in 1 week, right? This was, June 24, and I think this was just around after Trump took over, and we're talking about tariffs and all. So a 10% fall, a 10% rise, all that happened in 1 week. I'm not suggesting that this is what's going to happen, but you can't rule that out either. I mean, there's history and evidence to show that that has happened. You can see this candle also in April 25, right? That was from 22,800 to 21,000, say 800. So 1,000 points, right? Almost 5% down, 5% up, all within a week. So very volatile markets, very difficult to do shorter term trading, right? But these are the sort of moves that we should be expecting. And to make my point that no way I'm predicting that this is what's going to happen. But yes, very, very good opportunities are going to come by, which have not been available for a year or two or even more, especially after the COVID rise, right? And after this correction, this is the next big correction. So if you have been like, waiting, like I have, uh, this is like been a wait for at least 1 year, if not 2 years or more, right? So use this opportunity for getting into some good quality stocks, and see if you can, ride the next up move that is surely likely to happen. Will this war end with a quick end, or will there be an extended, you know, war of attrition? We don't know, right? There's a lot of stuff out there online. I would urge you to go look at some good stuff. There's some excellent opinions on. You do read this, okay? Let me see. Yes, right. The escalation trap, right? I strongly recommend that you read this article. Okay, it's called the escalation trap in the Guardian. There's also, if you get in touch, I'll send you a video link about this, right? So just go to the Guardian and look for the escalation trap. Very well written, and how this could pan out, right? For those who are looking for a much more detailed video on this, about 1.5 hours by a very good um, war analyst who has looked at this for the last 20, 30 years, get in touch with me and I will send you a link to the video, which is there online, to have a look at that and understand deeper, right? Again, putting up the contact information for your information, right? Okay. So as I was saying, Nifty close to another 5%, maybe more, but probably another 4 or 5% down. And then we could see some sharp recoveries happen. Like I said, all depends on events on the ground and how things pan out, right? So that's basically about the Nifty. And moving on to the, uh, all right, right. Moving on to the rest of the indices for India. Let's see. We looked at the NSE CNX 500 last time, and basically the same thing. As you can see, it has really, really, fallen off, and just more or less done exactly what the Nifty has done. So whether you're looking at the broad market or you're looking at just the top stocks, they are basically saying the same pattern. The only difference is, as we discussed, and I'm not going to repeat that, you can go and look at it in the YouTube channel. If you look at the 9th March video, we showed how many of these sectors and these other large cap market cap indices had already shown weakness by not going back to their previous highs. Nifty did, right? Made a nice, very clear textbook double top, but the rest of the indices had, not managed to go up, and there was a hint, a clear hint, for those of us who are avid technical analysis followers. The markets were already telling us that there was something coming. They will never tell us what was coming, and they cannot precisely tell us when it will come. But the warning signs were very, very evident, right? So now let's look at what the warning signs are for, the coming, like I already mentioned on the Nifty, right? Okay, just a interesting index that I found, and I thought I would share it, which is the inverse index, right? So what you're looking at is the Nifty 50 price returns inverse index, right? And the inverse index is basically the flip of what happens to the Nifty. And what is interesting in this, actually, what I find, and I'm going to probably dig deeper into this. If this is a perfect inverse, then this should have also had a double bottom, which it clearly doesn't, right? So there's something slightly different about the Nifty 50 price return inverse index. It'd be interesting to see what it was hinting, because what is there now, I mean, as I see it, I'm, realizing that uh, had I been, or had we been tracking this on a regular basis, the inverse index had also hinted of a reversal in the Nifty by not creating a mirror double bottom to which would mirror the double top of the Nifty, right? So this is the double top of the Nifty, but there is no similar inverse double bottom, right? This is clearly a much higher bottom, right? So was the hints also there on the inverse index? And if that is the case, why is it not exactly mirroring the Nifty, right? If anybody has any information on this, please would love to hear from you on what this is means and how we can use this. So the 500 index, the CNX 100, 200, I'm not going to go there, but basically the same. The mid cap index also basically the same, though the mid cap index probably has support at maybe higher levels than the similar uh, Nifty index. And looking at the small cap index, right? So small cap index, like I said, had already shown weakness, and that is gone down perhaps more than the rest of the blue chips, and um, further down is where the support is, right? So overall weakness across the board, markets just correcting. And now let's jump into the sectoral indices. Okay. The Bank Nifty, the most important heavyweight in the Nifty constituents. So the Nifty is basically now a heavyweight on the with the banking and finance stocks, right? So this has, as you can see, again, weekly index, a weekly chart sharply fallen off. Okay. And let's see, right? Sharp sell off in the bank. On the right, you have the daily, and you can see the on the left bottom is the weekly. You can see that big gaps are there. So remember, this is another thing when recovery happens that the TA says, Do theory says that gaps, also called windows, will be closed on the return leg. So there could be some very sharp recoveries that could happen, right? Now, something that we had mentioned last time also, that the private banks have fallen much more than the PSU banks. And like you can see that here very clearly, right? The private banks were going sideways, right? You can see here going sideways, and then there's this big fall that has happened. But the PSU banks, just notice this, right? Had been trending up, and then they have corrected. And here's something interesting for you to see, right? I've put the my studies back, and it's just simply moving averages, nothing great about it. Most people, most all of you, I'm sure, will see. Now you can see that the private bank index, the stocks, the index, and the prices of the private banks are well below their long-term moving averages. The red one is the 200-day moving average. But on the PSU bank side, it's still quite above. So the PSU banks are definitely strongly outperforming the private sector banks. So again, I said this on the 9th March. I'm reiterating this. Just notice where the differences are. So this is a, one could say a reversion to mean trade, and this is where the what's happening with the PSU banks doing more of a reversion to mean trade, while the private banks are just more like breaking down and correcting, right? So there's a difference there. This will also pan out in how they recover in the coming weeks and months. All right. Looking at the IT index, we are looking at daily now, right? The IT index not falling as sharply as the uh, Nifty or the bank Nifty for that matter, right? Clearly, there is a difference. Already mentioned on the 9th March webinar that the fall has definitely slowed down. And if you remember on the 9th March webinar, the IT index was the only green index, right? While in the last few days, things have fallen dramatically for the other indices, the IT index the fall has definitely come down, right? So there's relative, one could say, outperformance by the IT side of things. Uh, Auto has really now, accelerated to fall. The uh, I think the fears are now about not only oil price hikes potentially. Of course, the government of India has said that they'll not hike any of these prices, but usually government statements should be taken with a pinch of salt. Governments always, all over the world, try to maintain a semblance of stability, that nothing is going to happen, everything is under control and all that. But if you see what's happening with the LPG situation, there's no reason why this could not cascade into the um, petrol and diesel fuels situation. Though there is good news that Iran has agreed to allow, let's see, I think two gas tankers from Iran have been destined for India have been allowed to uh, come through. Where is this? Okay. I was just looking at this. I was seeing something. So this is another thing to keep in mind, uh, firewood, the firewood is in demand all over. Restaurants across the country have been burning firewood because the gases have commercial gas supply has completely stopped, right? So we are now going to what, start cutting trees, and what, deforestation is going to continue, I suppose, for on a escalated thing pace. So remember that this is how fragile our systems are, that things can very quickly go out of hand. So if this continues, then just a thought. What's your plan, right? What's your plan for fuel? What's your plan for energy? By the way, induction gas tops and electric cookers are just not available, just been sold out across all shops in Bangalore and being sold at 2x, 3x, 4x prices, right? So anyhow, coming to the auto side, yes, like I said, the fall has accelerated, though, right? You can see that auto has come back to what was a very nice, not textbook, but a pretty good enough head and shoulder bottom, right? This head and shoulder, big head bottom, it moved up and it's come to its neckline, right? Now, from here, will this, take support and go up, or maybe it comes down a little bit lower to say these levels, the auto index. So, that's what at 23,300. So that's about 2,000 points, another 5% lower, basically. And then do we turn around from there? Again, like I said, this can all happen in a day, in a week. So as things become more attractive, there are good opportunities to be had, right? Well, pharma, right? This is really a standout. As you can see, this is not cracking at all, right? Pharma, and again, looking at this, remember, weekly index, last 1, 2, 3 weeks, when this war has definitely been going from bad to worse, this has just been very, very resilient, and it has continued to stay high. Not a single weekly red candle, right? So this is a place for, this is defensive place, right? So a defensive stock, which is definitely a defensive sector, which is definitely holding up to the battering for the rest of the market. So if you're looking for opportunities, some good ones actually on individual stocks, though, well, for various reasons, regulatory mostly, I cannot speak about it. There is some stuff to be seen here, right? Metal index, well, not a big fall, right? In the sense that if you look at it from uh, where it was to where it is, okay, I mean, little outperformance in the sense that IT has fallen 25%, the Nifty, Bank Nifty has fallen about 12, 15 for 12%. This has fallen around 10%, right? You're not seeing the sort of big corrections in metal, right, on the right daily again, that you saw in the other indices. Uh, there is definitely something underfoot here. Metals were very, very overstretched, that's for sure, right? But looks like a healthy correction. and opportunities in metals to be looked at for those who are looking at a more long-term setup. Commodities, mostly a mixed bag, just coincides with a lot of metal and auto. Let me move on. FMCG, this has been really a weak spot, right? And Usually FMCG tends to, along with pharma, tends to be a defensive area, but this is really this time not proving to be that. It is under stress, but there is a weekly divergence for sure, which was mentioned on the 9th March webinar. And this divergence is actually getting stronger, right? So there is a case in FMCG, there's a case in pharma to be looked at and pursued. Not uh, so in terms of support, another 1,000 points down for the FMCG index, and then after that maybe it settles down, which is actually not too much. It's 1,000 points down is 2% on the FMCG index. So it's been weak for more than a year and a half, and maybe it'll settle down here and then, you know, turn around. So just keep an eye on that. You have the energy index. This is a mix of Reliance, Indian Oil, BPCL, HPCL, all that, but it also has electricity stocks, right? Like I said in the one of the midweek broadcast messages that I'd sent, that power companies were doing really, really well, right? So I think that was on Thursday or Wednesday, I'm not sure, where the market was cracking, but that was one sector which was like green all the way through with 1 to 6% up moves on individual stocks on the energy side. So alternative energy, whether it's electricity, hydropower, etc., those stocks are doing well. And of course, electricity demand is going to spike a lot, especially if the LPG crisis gets worse, right? How that puts stress on the grid after that, that's another thing to be seen, right? Infrastructure stocks, okay. Again, nothing specific on this, just going down with the rest of the market. Again, we are back to weekly charts. Realty correcting a lot. And this mentioned again in the 9th earlier webinar, the weekly divergence stays in the reality index. Of course, if it cracks a little bit more than that, the divergence may or may not hold. We'll have to see. But yes, divergences are there. So that's something too, FMCG and realty space, right? Um, Media, okay. I'm not sure how many of us look at media much. Let me skip. Yeah. And then you have another place which is showing strength and is of interest is the sense of the public sector and the central public sector enterprises and the public sector enterprises, right? Both of these stocks within this are showing quite a bit of resilience, as you can see, compared to many of the other sectors. So see, the public sector enterprises, the pharma companies, um, and the bullish divergences in the FMCG and the realty space. Interesting situation, right? Uh, MNCs correcting. Usually, MNCs show a lot of strength, right? Especially during corrections, but this time they are not, and going down with the rest of the market, just like many of the major sectors. And services also. Services is mostly IT, so this is definitely to be expected, right? So that's it. That's the review for the sectoral indices. We found some really more interesting other indices. We'll cover that in some future webinars. There's some subsector indices now, government security indices, and some other thematic and other indices. We are going to cover that in the future, right? So just to return back to the Nifty, remember that we have this Elliot Wave projection, just to tickle our to something for us to keep in mind, right? And wave three may or may not be over, right? These are what is called an alternative count. You have to have the form of Elliott wave. So if those of you, I'm sure, internet is there. you're not sure what Elliot Wave is, again, feel free to get in touch, or yeah, of course, you can Google up things or AI things nowadays, right? So wave one, wave two, wave three. If wave three is over or gets over at some lower level, whatever it is, there will be a rebound wave four, and then we have to see a wave five, right? Uh, and if wave three just took this whole, 1 week to happen, or that's basically that's it, or maybe 10 days, you could see something of an extended wave four and then wave five. But then all this is subject to what happened on the ground out there. But it helps to have some idea of where the market is heading and what to expect. So just to reiterate and cover and close is the fact that we are perhaps, not perhaps, quite sure we are getting close to some good opportunities, some excellent opportunities indeed, like I said, which anybody looking to take advantage of them should look at it more closely and jump in and then just hold on. Everything ends, all conflicts end, all disruptions end, and the markets do tend to recover, right? So thank you for your listening, for your participation. I look forward to hearing from you. Again, my information is on the screen for you to connect with, and we will see you again in the next webinar. And stick around tomorrow, not today, but tomorrow, we'll probably post another webinar on the global markets and maybe some other asset classes. Thank you so much, and see you next time. Bye.